модель захисту прав споживачів. I'll just translate briefly for Wilte, because the translation set was not working. Wilte, I was just asking, why do you think the Netherlands are showing probably the best examples in the EU as to consumer rights compliance? Is it because the consumers in the Netherlands are more financially literate than consumers in other European countries and the lenders have to pay more attention to their needs, or that's because of the supervision model that you're implementing?
Well, I was of course very flattered to hear that from you and from Julia. I think everything's always relative. So we also worry about financial literacy of Dutch consumers. But it also, I think, helps to have a certain framework in place that makes it easier for consumers to do the right thing, or to prevent them from making mistakes they don't want to make, or so enable them to make the choices they do want to make. That's, I think, one of the things. And now I see I'm presenting Pavel's presentation on the Polish ombudsman,
no,
which
the Ukrainian version is fine.
All right. Right. Yes. So thank you very much for attending here, and I'm really happy to be able to share our experiences with you. And I also want to point out, I want to give you some sort of a tool set or our experiences, and then I guess it's up to you to pick and choose, because I know the Netherlands is quite different from the Ukraine, so the things that work for us might not work for you. But I would like to give you sort of a framework or a methodology or tools to figure out what interventions work to get to where you want to be. So I'll tell a little bit about the Dutch Dutch Authority for the Financial Markets. And the point I want to make is that with a realistic view of consumers, that you can sort of develop potentially successful interventions, and that might be fines, but it might be anything. And then you have to sort of measure what works. So I'm not going to say disclosure will always work, fines will always work. You have to just sort of experiment with that and try and find out what works for you. And I'm just going to tell a little bit about things that have worked for us at AFM, and we're pretty mission driven. So of course we have rules, but we also have a lot of principles. So are financial service providers treating their customers fairly? And we can just ask them, like, is this product beneficial to your consumers or not? Or what's in it for them? I mean, of course, banks or financial service providers have to make money and earn money, and that's fine in a free market. But it also has to have an advantage for their consumers. So we are committed to promoting fair and transparent financial markets. And that's all our overarching means. And we want to use all the interventions, all the tools we have to get to those fair and transparent financial markets. And in the Netherlands, we have a Twin Peaks model, which means that we at the AFM are the Market Conduct Authority for basically all types of institutions, and the Dutch Central Bank does the prudential supervision. So we have two different entities, and that makes conflict of interest less of a problem. But we do cooperate, obviously. And our view on regulation is we focus on effect, and we follow this Harvard professor Malcolm Sparrow, and he's got a pretty simple philosophy. It's just pick important problems, so be risk-based, and fix them. So get rid of the problems, and then you have a whole suite or a whole set of tools that you can use to fix problems. And one of those, and we're experimenting more with that, is sort of a psychological way of fixing problems or using interventions. And it's kind of similar to what advertisers or marketeers already know a long time. You know, those advertisements we saw this morning, they're also trying to influence people to do, in this case, buy a loan. But you can also use it, I guess, as a supervisor to have financial services providers do what you would like them to do, to be compliant, sort of the marketing of compliance. And you can read about that on our website, and this whole presentation is freely available. So I'll just skip that. But it's also important, I guess, to have a realistic perspective on human behavior. So what I mean with that is that people's behavior is not always rational. So it's kind of strange that you go and take the escalator to do a Stairmaster thing at a fitness thing. But people do that. So you can all relate, I guess, to how people actually behave. and people actually sometimes, often behave predictably irrational because you have biases or you use rules of thumb to make decisions. So most of the regulations are based on like sort of robots that are fully rational, know everything, read everything, think everything's really interesting. And that's not the case. But we don't have to go all the other way, in that we're all like Homer Simpson, we're too lazy to do anything and too foolish to do anything. So at the AFM we use a realistic perspective, which means that's just somewhere in between, you know, like it's bounded your time. You've got other things to worry about than financial products. And sometimes that leads to bad decisions, but not always. So it depends. But it's good to have in mind who is the customer, what does he understand, and is this solution, for example, disclosure, really fit for him? Can he understand it? Can he make proper decisions based on this? And also important to keep in mind, there's a huge gap between intention and behavior. This is an American study, and they had a seminar for 3 hours on pensions, and at the end they asked, are you going to do something about your pension? And 100% said, yes, I am. And 6 months later they checked, and only 14% had actually done that. So it's also good to keep in mind that sometimes, or maybe often, people don't do what they actually want to do themselves. So that's also something to deal with as a regulator, I guess. So you can use those insights to think about potentially successful interventions. And you have a whole toolbox, I would say, as a regulator. So fines are one of them, or revoking a license. But like Sevak said, you can also have soft controls, and sometimes they're more effective, and they're often cheaper as a regulator. You know, one phone call, if that saves you a long process of issuing a fine, I mean, you rather have the one phone call if that helps to make the markets fair and transparent. So always look at the problem and pick the right tool. And you have different parts where you can intervene. You know, you can look at the information and change that, or you can look at the product. Is that, you know, in the customer's best interest? Or you can look at how it is sold. Is there a conflict of interest by intermediaries? So there's all different ways that you can tackle the problem. And it's also good to say, like, information is not always the silver bullet. So the information can be perfect, but that doesn't mean it will always lead to the best outcomes. And then these are just some links of how they use it. So I've made a sort of a scale of interventions, different types. So you can do totally nothing, which is on the left side for you, or you can sort of prohibit things, which is totally on the right side, and all kinds of things in between. So, you know, financial education, we have that in the Netherlands as well, or, you know, giving information, it's more on the left side. So we have a MoneyWise platform, and we have our own website with information for consumers. But we also have, we have an interest cap on consumer credit. So in the Netherlands, a loan can't have a higher interest rate than 14%. And in 2000, I think 12 or 13, we also instituted that for payday loans, and it was very, very effective. So in 2011, we had about 90,000 payday loans in the Netherlands. In 2013, we only had like 1,500. So sometimes prohibiting something can be really, really effective. And of course, afterwards, some parties would try to call the interest administrative costs, so you have to sort of follow on it. But, you know, prohibition can work. And also another thing we have in the Netherlands is a warning for caution borrowing costs money. So to make it salient, you know, it's not free, you have to pay it back. And, well, there are some other, I'll skip those. But we actually have practice what you preach. I'm telling you about potentially successful interventions. So you have to measure whether or not they were really effective. And we did that for that warning. So this is what it looks like, and it was mandatory for all advertising on financial products. So the two commercials you just saw in the Ukrainian situation, they would have had to show this warning somewhere in that commercial. Like, okay, this is a commercial for a loan, and if you loan, that will cost you money. And so we tested it. It was implemented in 2009, and it's still mandatory. But we were like, does it really work? And so we worked together with a big bank, and on their website we had visitors, and they were randomly assigned. So 6,000 visitors got to see everything on the website except for the warning. So actually it was non-compliant, and 6,000 got to see it, including the warning. And we just looked at, like, does it make a difference? And well, sadly, for this intervention, it did not really make a difference. So the number of pages they viewed or the number of people that applied for a loan was similar between the two groups. And the only difference, mind you, between the two groups is whether or not they saw the warning. So, and there was no difference in how much money they wanted to borrow, or how much money, or how many, what the percentage was that was accepted. So we had to sort of conclude, does the credit warning work? Well, not really if you want to actually influence behavior. So whether or not we showed this warning after 8 years after implementation, it did not make a real big difference. So measure what works. Maybe we should try to think of other interventions to counter over-indebtedness in the Netherlands. So in 2009 we were really happy. It's a big success. Everyone knows it. In 2016, last year, we said, well, we couldn't find a real immediate effect. So you have to be humble about it as well. Fortunately, we have another kind of warning, and I'm going to skip through it. The bottom line is it did seem to work a little bit, especially for people who had never heard of it before. And I just want to make one more point before summarizing. It's that we also have a MoneyWise platform, which is the sector, the regulators, the finance ministry, and we want to strengthen responsible financial behavior in the Netherlands. Again, behavior. I told you about intentions, not behavior. There was a focus first on awareness, and awareness is really important. But at the end of the day, it's about behavior. So I'm really happy that the MoneyWise platform is also about behavior, like responsible behavior. So one point I want to share with you is that pick the right tool. Not every problem is a nail, so choose your intervention wisely. And for effective behavioral regulation and to fix important problems, you have to have a realistic perspective on human behavior. And that leads you to potentially successful interventions, but you always have to measure the effects and what works. Thank you very much.
Дякуємо, Вільте. В нас, на жаль,